Mr. DIY Group is our stock to watch. CGS CIMB researchers keeping its ad call and upping its target price on the counter from 4.25 to 4.40. The home improvement retailer's shares closed at 3.63 on Wednesday. Mr. DIY announced its latest financial results a couple of days ago. Quarterly earnings were down by some 20% to 90.35 million ringgit, but 9 months net profit was up by about 30% to 297.3 million ringgit. According to CGS CIMB, the retailer's 9-month core net profit was below expectations at about 62% of its full-year forecast and 66% of Bloomberg consensus estimates. This was mainly due to lower than expected sales as a result of movement restrictions that led to store closures during the quarter. With restrictions now relaxed, CGS CIMB expects fourth quarter average revenue per store to bounce back on a quarter-on-quarter basis. It notes that Mr. DIY opened 107 outlets in the first 9 months of FY21, with the aim of opening 175 stores in the whole of FY21. As such, the research house expects an aggressive store rollout in the fourth quarter as construction activities have been allowed to resume in most states. Mr. DIY also told analysts that it targets to open 180 outlets in FY22, representing a circa 20% increase in store base. CGS CIMB says the bulk of the store openings will comprise Mr. DIY and Mr. DIY Express outlets that have performed well during the pandemic. The rest of the store openings will comprise Mr. Toy and Mr. Dollar outlets that should benefit from a resurgence in retail footfall from the fourth quarter onwards. So what's the consensus? According to Bloomberg data, we've got 11 research notes on Mr. DIY this month, and they're overwhelmingly buys. Average target price 4.28 ringgit, about 18% higher than the stock's last close of 3.63 ringgit.